Good morning, everybody. Welcome, welcome, welcome. Kind of watching NASDAQ here. We're into one of our decision areas, and we're looking to see if we're going to get a trigger, which is going to be the whole point of today's Q&A. So jump in here, and we're going to see what we can do. See if they can get above this cluster here, this 6708 area. They do. They got some freedom to fly higher. We'll see. Okay, that's there. If they can't, if they make new lows, then no trigger yet. Trying. They're fighting in this area for sure. All right, so you got here just in time. We're looking to see for a potential trigger long in the NASDAQ. We're going to be targeting back into this area if some buyers step in. We're kind of right in a zone of concern that if they can't hold this, then there's really nothing to say we can't keep moving lower. But this is a composite area of inventory that is holding the auction up as expected. That's great, but still not seeing buyers stepping in yet. So want to see sellers try and fail. That's what we want to see. But really need to kind of get above this 70 or 6712 area first. That would be ideal. Let's see what they can do if they can. Trying. Seeing some buyers stepping in here. See if they can come close these singles here. Up to 27 is kind of the area that we're looking. They're trying. Yeah, welcome everybody. So if you've been here before, we kind of we'll go over a little bit of a concept here in a second. We kind of have a potential opportunity shaping up, so I'm kind of watching that. If that happens. Otherwise, if that doesn't, then we'll talk. We'll go over a few things, and then we'll open the floor to questions. A couple ways that you can ask questions are via there's a chat box or there's a Q&A thing. Either way, and feel free to ask whatever questions you have. We'll try to address those as we have time. Come on, buyers. So we're in the E period here. We've actually we've tapped 1.5 the IB, and we're still inside of yesterday's range. Sellers are kind of controlling the day thus far, just because yeah. So we want to be mindful of that, and we are into our initial kind of bias level that, hey, if we got below that, that would kind of change the story. So just trying to be smart about this. But there is an opportunity. You can see value is back up here at 67.54. So for this auction to continue to move lower, it's going to need to keep accepting these lower prices. Otherwise, it's running the risk of snapping back. They're definitely fighting around this zone. Somebody's going to win one way or the other. I'd love it to be to the upside. So anyway, if you can get above 67.10, then I want to look for kind of pullbacks again to the 6,700 level to target back up to like the 57, 54 area. Here we go. I think they're starting to give up. I think the sellers are starting to give up. Maybe, just maybe. Still haven't seen any aggressive buying coming in yet. It could all still just be profit taking. Come on, gang. Yeah, so it's a why would I like to be to the upside? So, couple reasons. One is I can see where we are in the profile right now, that all the value is above us. So all of the the inventory is higher. So pressing lower at this point, I would be selling below value, and doesn't mean that that's not the right trade. But we've also already extended the IB low. We've done 1.5 the IB, which, by the way, there's about a 25% chance that we'll exceed that on any given day. So the odds are starting to stack against going lower further. And we're in a zone of inventory that, coming in to test it, looking for the auction to hold, which right now we're holding. So it's doing what, we're expecting. So that plus, we've got some anomalies in the profile here. We got these single prints. See, if you look at a typical day, there's overlap, rotations back and forth. So we've got some spots that are a little impulsive. Think of it like a midday gap. And, to have two of these in one, have one is not too unusual. Have two is fairly unusual. So I think there's a potential. I think the best potential right now that I could, define risk is back to the upside. Now, if the point of control rotates lower, that would confirm acceptance of lower prices and could suggest we could move down to the 66.30 area. We were short earlier today when we were trading above yesterday's point of control on this move. That was the nice definable short. With some trails, I didn't get the bulk of this. So it was kind of on the sidelines down here, and now looking. Yeah, see, now the point of control has migrated lower, so that is accepting lower prices. So let's see if they can make another new low here. So now the opportunity short, I would be interested in shorts, but not right here. I'd actually like to be short, up into this zone. So I'd like to see a rally up here to then get short. If they give it to us. I don't know if they'll give it to us. They're not the best at giving us that kind of stuff. At least not this week. Good heavens. It's been a frustrating and unusual week to say the least. But that's why I'd like to be. That's why I was initially interested in being long. So now since the point of control has moved down here, the trade idea kind of changes. And now I'm looking for a move down here with value staying here that would give me an opportunity to get long for the move back up here, or rallies back higher where I could these would be kind of zones that I'd be looking to be short and look for triggers short. So kind of stuck at the moment, which that allows us some time to go over what we're going to talk about today, and then open the floor to questions. All right, welcome to our live profiling Q&A session. Great to have you with us. Always mindful of the risk involved with futures trading, and it is a risky business. You can lose quite a bit, so you need to know where you're wrong and where you're right, and trade accordingly. A little background on me. Didn't start in financial markets, came to it later in my career, and have been in almost we're getting close to a decade. Started on the retail side before moving over to the institutional side, and really a lot of things changed for me when I got introduced to the profile in 2012. JP is the other part of our team that he's not on the call today, but if you've been around these, you've likely seen him. He's got a lot of experience and perspective that's helpful. And today we're talking about reducing risk with what we call triggers, using shorter time frame triggers alongside the profile to reduce our risk as we're going after opportunities, because that's about all we can. Look at that, they're at 14. Let's jump over here real quick. Yeah, so now we're going to watch and see if these singles get filled up here to 27, 28 area. That's kind of 67, 28. We might look long yet here. We'll see. When we do these profile questions, or these Q&As, we typically try to pull at least initial concept that we can cover and then open the floor to questions. And we do that based on what we're talking about in our profile trading development pathway. And this is our development process that we use to help traders build trading skill and consistency. We do a module each week. This week we've been talking about triggering using smaller time frames. So using the profile, everything we do is around the profile graphic, but then we call short time frame triggers to help us express risk. And really, this is working around 3 thematic areas that we focus on every week. Just 4 behaviors observable in every auction, 4 questions to ask before entering trade, specifically that one. 4 questions to ask before, or ask and answer before you put a trade on. So, those 4 questions are: what's the opportunity that we see? What are we willing to risk to go after that opportunity? What would tell us that we were right? And what would tell us that we're wrong? If you don't answer those 4 questions before you put on a trade, you don't put on a trade. And specifically, the challenge that we've been working at this week is, hey, I'm in an area of interest. So there's an area that I've identified as I'm interested in participating, and I want to confidently enter the trade in a way that clearly defines the risk and stacks the probabilities in my favor. So what should I be looking for, and how do I quote unquote trigger into the trade is the idea. And so let's see here. They're almost there. 25, 24. What do you mean by almost there? Again, look here at the profile. See how they're working to clean up these single prints. So that's a form of opportunity. Hang on a second, just gotta look at something real quick. Okay. The risk is that if you don't understand how to trigger into a trade, then you end up taking on too much risk when you put on the trade, or you miss the entry entirely. And fortunately, the auction there's a principle at play that the auction behavior is consistent across all time frames. And time frames is trading jargon. It basically means, how do I look at price, where the range of price within certain periods of time? Like how far a range of price did I have in the last hour? How far a range of price I have in the last 30 minutes? How far a range I have in the last 15 minutes? And compare that to prior periods. But the behavior is consistent. So patterns of behavior that we see at smaller time frames exist at larger time frames. It's a little bit like everything in physics that works until you get to quantum mechanics. Like everything works in the natural world. Except when you get to the quantum stuff, then it starts to get a little fuzzy. But same thing is at play here, is that for most time frames, it's consistent. So we're able to minimize our risk through the application of auction behavior in a small time frame. Auctions behave in consistent ways. So let's look at what I was looking for here initially. The opportunity was there was this price away from value was originally where it was, because we had price down here and we were in a zone. So what I do typically when I come in each day is I have the profile graphic, and I have predetermined areas of interest that I'm interested in doing something with. I actually had one higher here at 67, 78 that I've erased because we came into it and so we hit that one. That one's gone. But now we had this other one down here at 67. So a couple reasons why this is an area of interest. So it was an area of interest because it was a composite level. So from Globex and all the way back to this date here, if I merge all of that, I get this composite area of inventory where I saw both buyers and sellers present. So if I had buyers and sellers present there in the past, it stands to reason I'll see buyers and sellers again. All right. So, but once I'm in that area, I want to find a way that I can express risk. And so we talk about triggers. So there's a couple different ways. So there's time-based triggers. So this is a time-based chart where you have 5-minute periods nested inside of 30-minute periods. And we look for specific behavior. So there was actually one right here, and this is what we call an engulfing trigger. So this 5-minute period engulfed the range of the prior 5-minute period. So that's a rejection of lower prices, and you could have been entered here at 67.10, and then your stop would have been the low, and then your target, originally my target was up here. So see how that allows me, from a reward to risk standpoint, to express risk relative to reward in a way that I really, really like. And then now I can just trail the trade. This is a time-based, because these are arranged by 5 minutes. Another one that's what we call a counter, or a fade, right? Because the predominant trend has been to the downside, so we're looking for something to fade. So what we look for first is in that area. So we were looking for the behavior in an area to pause, which it did. And then I look for a shorter term time frame to trigger in, and then get really tight on where the risk is. So that's one way that we've talked about doing that. That's it. And what's interesting is you can trigger in lots of different ways. This is actually a volume-based trigger chart that each candle represents 1,000 contracts. So, in this case, you can see how the auction was, buyers and sellers were active in the zone that we were looking for. And then right here, let's zoom in. We'll zoom in here. So you can see, for whatever reason, sellers were holding it down right at 67.08, and they came back in and punched through it. So you get a buy stop entry here, and then a sell stop to protect here, again for the same target. There's arguments to be made for for both. Which one's more effective? Is it more effective to have the time based or the volume based? Or there's also tick based, meaning how many trades fired off. Not it doesn't matter how many contracts, but how many trades went off. Or Rinko, which are range based, meaning like if price moves so many prices, I want to see another candle. I say and encourage people in our community to play with all of them. Try all of them, but be consistent in whichever one you apply. The other aspect of this is that you don't use a short-term trigger until you're in a zone. Until you're in that zone, you don't pay attention, because we'll typically set alerts in the zones that we're interested in being active in, and then we'll look at that short-term trigger. So like this morning when we were looking for a short, here a couple different ways you could look at that. One of the things we were watching is that we had opened, moved higher, and then came back through the open. And so the trigger here was, hey, if we come back through the open again. So right here was the trigger entry, and we were going to defend trading back through this volume area here. So stop could have been at the top of this 5-minute period or lower, but the clearly defined target was moving to that point of control. So that's what it looks like on a time base. This is what we call a go with trigger. So you're trying to anticipate the move. And here's what it would have looked like from a volume, candle. You can see there was, some early open chop. They attempted lower, they came down into this area, bought it again, they came in, and then when they came back through, they were, for whatever reason, they were defending this area. So when they punched through that, then you could have actually had a stop here. So that you can see you have a little tighter stop on the volume base than on the time base. The time base would have had your stop up here, which is more risk. And it's all about keeping your risk small. Because if your risk is small, one, you can stay in the game. Two, you can also size up. So I get questions all the time, like, how do I do larger size? Well, the reason how you get to do larger size is that you have your risk tighter. So if your risk isn't tight, then of course it's going to give you anxiety and scare you to have lots of contracts on. It should. So that's what we've been working on this week, is just looking at, once we identify areas of interest, then how do we trigger into those trades? So now I kind of having seen a little bit of how this day's going, and I know who's in control. So sellers are in control on the day, although this is an inside day. Okay, we're trading inside of yesterday's day, which was a bullish day. However, we're challenging that a little bit. Especially if we get below this price. But there are some zones now that are interesting if we can rally to join the shorts and would give us good trade locations. So there's a zone up here, and there's a zone around here that, if those come sooner than later, offer some opportunity. I'm also interested in potentially looking long. If we come down to this 66.35, I could look for a trigger down there. So I can just set alerts at these places and don't look at the market. But once I get to those areas, then I'll start looking for opportunities and triggers around that. Great question. Great question. Okay, got another question. Can you look at sugar and OJ? We can look at sugar and OJ. So let me. That's not what I wanted to do. I wanted to open a chart. Open. So this is a daily chart with monthly profiles. Hang on a second. Okay. Just had an order fill. That's why I was kind of. So these are just monthly or daily bars inside of monthly profiles. So it kind of allows me, especially on products like OJ or sugar that I don't trade very often, that kind of give me an idea of where we are. This is a continuous contract. I'm not real sure. Let's see where. So we're looking at January contract right now. Yeah, the 267 contracts traded in in Jan. Let's see what March has done. 66 in March. It's a very illiquid market. But you know, couple things here in OJ. So you can see this prominent point. So this is a I believe this is 9 months. Yeah, this is 9 months. So this is a composite of the last 9 months. That interestingly, you can note that this month OJ came down into this price right here, and see how, you know, the price reflected off of that. So I think there's an opportunity to upside in OJ, especially if they get above this area. You know, next decision areas would be here, and then there's a kind of a low volume area that they could punch through, and then they could get up to the 155. So, you know, in terms of risk, and then when we talk about, like, you can define risk on, and the auction stuff works on every time frame. You know, here you have a daily chart, and you can do this. So, you know, I don't know how you express risk on this. If you want to do, I don't know if you can, if OJ is even optionable with that small liquidity. But there were buyers and sellers active here. So as long as you hold this level, you could be long for these prior areas of inventory higher. And then sugar. So sugar is a balanced market right now. I mean, you can see it's been on a slide for a while, and this move right here shut off the downward auction. So that doesn't mean that you know, like, it's a turn. It just means that, you know, there's a whole bunch of inventory up here. So there's a lot. There should be, you know, there's a big node of volume up here that would, you know, cause some headwind. And you can see we're right there on the 9-month value area. So let's hit something trigger. What is that? Oh, nice. I've been looking at platinum today. Okay, so what's our next? Looking for 66.43. So just have an alert down here at 66.50. Let's see if we can get down there. So far trending lower in NASDAQ. So, I mean, any price lower is possible unless that stops. So let's see if they can pull back to. So anyway, sugar. I mean, I think I like sugar to the upside, so long as it can stay above this area. That would be kind of my, you know, so my risk would probably be last month's. You know, nobody's day trading sugar. They're typically looking at that on a swing perspective. Is that helpful? Answer about sugar? So yeah, platinum. What's interesting in platinum, and we talked about this a couple weeks ago around you know, 3 variables that you could use. You can use the current price. You can use the point of control for the last 5 sessions in the last 20 or so, weekly value and monthly value. So you can see we're what I call an auction extreme. So, you know, I'm actually looking for triggers back up for first target at 808 is what I'm looking at. And, you know, if they get above that, then I'm looking for them to move here. If they continue to find some buyers, it could be a turn. Long-term chart, you know, they're kind of in an area that you know, they're certainly pausing to move back higher. So I like it. I'm actually, you know, today I'm even kind of looking to see if they can get, although I don't like establishing positions on a Friday. So what I might wait to see is I might wait to see Monday, you know, can they push lower and then come back, you know, kind of back through this area, then set risk here, you know, for that target up there. We'll see if that happens. Yeah, nice. Just one time framing lower. It's classic trend days so far. And by the way, trend days typically exceed 2 times the IB width, so that would say that the 6640 area is a good potential. That also means that if in this 30-minute period we get up here to like 6707, I could join the shorts. So if we got up here, because there's inventory here during this 30-minute period, then that could be a potential to join the shorts on it with a trigger. So let's put a 6704. I think I already have an alert in that area, but let's just double check. Yeah. See this nice price correction pullback. So, you know, different color. Auction trends pulls back, trends pulls back, trends. So really, unless you got above, you know, 24, there's no end to the trend. You know, so again, we're looking for a potential pullback here that we could short for the next target down here. So I'll just set an alert and we'll see what happens if we get up there. If we get up there, it's just it's an area of interest. Okay, so done with plate or platinum. Yep. Okay, so when looking for areas of interest to enter, do you look only at peaks or do you also look at valleys? So I typically focus on the peaks, and we talk about this in module 12 where we're selecting decision levels, but the quick preview is that areas of prior inventory have different expectations of behavior from like where we've accepted price from areas that we haven't accepted price, or areas where we reject price. They behave differently, and so I like the peaks because they typically, well, just here, case in point. Okay, when we came into this zone, this decision zone, which is, you know, we knew that level this morning before we knew it last night. So we spent the better part of an hour trading back and forth across that area. That gives you time to make a decision. That's why it's a decision level. Low volume areas, you typically just slice through them like a hot knife through butter, or you come into them and reject out. So, but anyway, they behave differently, and you know, I want to have time to make a decision. I want to set an alert in an area and get in that area and then kind of focus on it, because I don't want to look at screens all the time. And so for my taste and preference, I focus on if I'm looking for a place to target, you know, also like, you know, if I expect it to slow in that area. So, you know, like this was the target zone on the short, and, you know, notice we get in here and we kind of spend some time, and that's pretty consistent behavior in a prior high volume area, you know, where you'll see stuff move swiftly and it was all low volume area. So I have found that by focusing on the higher volume stuff, I have more time, and I can go away from the screens and be refreshed. And so then when I come into those zones, you know, then for the 30 minutes, 40 minutes that I need to focus, and then find a trigger, I get into the trade, and then, you know, get my stops in, and then I can kind of let it go from there. Because you don't want to look at every wiggle. And, you know, I like to be an intraday swing trader, so I'm not interested in ticks. I want points, and several points. And right now, I mean, good grief, this, you know, today, just the RTH range is almost 100 points wide. So if I got 25 points of that, 25% of that. That's a great day. Really, really interesting. So I hope that helps. So it's a great question. Great question. They're not, yeah. Let's see, what point of control, would the point of control be considered a point of interest for entry? Yeah, actually, so the narrative this morning, well, let's look at yesterday in the NASDAQ, just as a point of reference. So yesterday's what we call a neutral extreme higher day, and that's a very directionally convicted day type. How that works is that you have the first hour's trade, and then you extend lower, so that's seller control, and then you come back and you take out the IB high, and you see a spike right here that takes out the first hour's range, and then off to the races to close the gap, and we close back inside the prior day's range. So think about that behaviorally. The auction opened with a gap lower, initially was able to push lower, and then failed going lower, reversed the other side, closed the gap. That is not a bearish behavior. That's certainly sellers relinquished control, the buyers stepped in, and were able to really effectively move the market higher. So the expectation today was actually that we would get up here and test the 68.90 area, and I was looking for pullbacks. I had one zone here, and then I had the zone here as potential long interest areas to go for that target. Okay, now that's before I see the first hour's trade. That's before I see IB extension and all that kind of stuff. Because once we have IB low extension today, then for today at least, the control is in the hands of the sellers. So now my expectations to the upside are a little tempered. But I started with yesterday's point of control as an area that I wanted to come in there and see, could we, because if buyers had stepped in there and we, because that was in the first hour, if we'd come back and taken out the IB high, then absolutely we would have been looking for 68.90. But that's not how it worked, and now we're in jeopardy of reversing this whole day that happened yesterday. So I mean, it's possible this afternoon that this market just absolutely throws up. And if it's a true trend day, I mean, here's a target, but we've also got a naked POC here at 65.76 that's potential, because trend days often exceed 2 times the IB range, and if it's a true trend day, we won't see the bottom until the end of the day. So we'll see. The thing that would negate the trend would be if we could trade higher on a 30-minute period. See, every 30-minute period we've had a lower low, or lower high, lower low, lower high, lower low, lower high, lower low. Well, we had one period that had a higher, it was an inside, and then now we've got a lower one again. So until that stops, any price lower is possible. And kind of looking for potential areas to trigger in and join it, but I'm just not seeing them yet. We just keep dancing around this area of inventory, so that's making it tough. It's making it tough. Great question. All right, so Palladium is now into so here, I'd be looking for a go with trigger to the upside. And a go with trigger would be, that the auction tries to go lower and then comes back higher now. So I'm kind of trailing this thing lower. So unless they can get above 791, not interested. Now, if they come back and take out the low of the day, then that would throw the hands back to the sellers, and I will, again, wait until, and I'm still going to most likely wait till next week on that one. Okay, here could be a potential pull higher for, well, we got quite a bit left in this period. Now, if something happens and we come back and engulf in this 30-minute period and engulf the prior period, that would also say that the downside was over. And there still is opportunity to the upside here. We got these single prints that could, take the trade back up here towards the open. That's still a potential. I've seen a little bit of buyer step in here, but we have to get a higher high on a 30-minute first. And that's, when I say higher high on a 30-minute, so whatever time frame you trigger in, especially if a prevailing trend is to the downside, I like to see a higher time frame confirm that. So even if we get an opportunity up here to short in this period, I would be wrong if we trade above 67.29. I don't want to see a higher 30-minute period if I'm looking to trigger to go this way. See what they give us. If they give us anything. All right, so we're looking for a pullback to join, see if we can get it next level in the shorts. If that comes before we get to 67.30, I want to get there. So let's So what a potential trigger could be is if we trade back below this area here, I could use this as an area of risk if I was targeting these new lows. And what I'm seeing is, here's the spot where the move kind of started higher. So if we can get back below that, otherwise it could just be higher. Let's see, just kind of looking around some other markets here. I don't have anything else that's triggered by alert. I'm just kind of watching them. Now here's a situation. Now notice ES is a little bit different story. So see the point of control is right here. And the ES came down, and look how it's balanced and finding support in this area. So there could be a potential, especially if ES gets a higher 30-minute, that we could be looking for trade back up into the range, and that could present for the NASDAQ as well. So we'll see. So to your point, Scott, I mean this. Obviously, we came in here, and there are a couple times that we came into yesterday's point of control in the ES, and found buyers for some couple point moves actually. Let's do a quick check of the deltas here. And the NASDAQ, the short side. But all right. So they've come back to that zone. Go over the NASDAQ chart here. So see how they're pushing that. Let's see if they can make some new lows here. So if you're going to be short now, you don't want trade above this area. And this is always the trade that I just don't like this trade. You know, the part of my brain that goes, I know that it can go to this, you know, this price, and it's trend day going lower. We've migrated value lower. But I love selling above value. I just love it. I'd much rather sell up here or sell up here. And that, you know, that's one of the great things of trading. You know, you see people say, well, you know, should you be long or should you be wrong? You know, right, or what is that? Like, which one should you do? And depending to your plan, it could be either, according to your plan and time frame. Now, if they come back above this without making new lows, then I'd say that, you know, then the next step that they could look to test is up here. And then that would get into the better short zone up here. We shall see. Oh, nice recovery. And perfect trade today in fat cattle. We had an inside day yesterday and looking for you know, wherever the break was. So it was to the upside because we accepted higher value. But if we traded below this, we were looking for a move returning back to near-term value. And look at that. I mean, just boom, right there. Beautiful. Just beautiful. All right. So again, short 67.10 is your area that you're holding. This is your short risk zone. You know, you're triggering back, you know, here because of the, you know, buyer stepped in and they came and reversed those. So you know, this is going with, and here's the ultimate target. And now, you know, once in the trade, you can start trailing it. And, you know, there's another area here that, you know, we can have stop now at 6,700. I don't yet see exhaustion. I mean, there's 100 contracts down here at the bottom, but, you know, like when you start seeing 3 or 4 or 20, that's when you typically see it. Oh yeah, here they go. Here's new lows pushing. So now stops at 90, which was basically the scene of the entry right here. And again, target is down here at this next decision level. So that's a go with trigger. That's how we use, you know, we use an area of interest, and then we use a, you know, a shorter term time frame trigger to help us, you know, get in the trade. And then, you know, like once I'm in the trade like that, you know, then I can often just turn off the shorter time frame and just, you know, let the thing do its work. Because, you know, what I don't want to do is, you know, I don't want to get out of this trade when it's still valid, you know. So what are the questions? We got about 10 more minutes. Ten more minutes. Oh, they need to come stop me. What's everybody's plans for 2019? You've been thinking about that? Thinking about what that's going to look like? Thinking about, so okay, here's a question. Can you briefly summarize the triggers from areas of interest? So there's, I mean, I think there's three triggers that we talk about in this module. One of them is what we call a go with trigger. So you're looking for an opportunity to go with trade. And typically a go with trade looks like something, actually, let me pull up a whiteboard. So let's, yep, I'm stopped. Okay. Now go with trigger is like, say there was an area of interest that I was looking to be in, price moves away from it, okay? And then I want to see price accept in that direction, and then when it makes new highs in that direction, then I can have a stop below that, you know, assuming that I had a target somewhere up here. That's a go with from an area of interest. Another one is what we call a counter trend. So if I'm, you know, moving away, price moving away, and I want to find an opportunity to fade it and go the other direction. So let's say that these are, you know, volume bars or whatever. So I might have bars going like this, and then, you know, I have one that comes like this, and then it goes down like this again, and then it comes back up through a prior high. I mean, there's a couple different ways. One, I could have either entered right here where it reversed and have a stop here, or I can wait to see that this thing took this thing out, and then have a stop here, again, having some target up there. The last one that we do is what's called an engulfing. So, you know, you got bars coming down, coming down, coming down, and then all of a sudden you've got one that goes like that. So price went below and was rejected and closed higher. You know, then your stop is below the base of that, you know, wherever your target is. So that's a quick overview of the triggers that we use, and again, you know, we talked more about those as part of the pathway this week. Yeah, and any of these, when we cover on these Q&As, you know, we're kind of giving you a preview of the stuff that we spend the rest of the week doing. You know, we do an hour on Monday, kind of going over things, and then we spend an hour on Tuesday, an hour on Thursday trading live in application. So we do a lot more of it than what we're talking about. You guys getting kind of the high level. Okay, do you use trailing stops? So Tony, when you mean trailing stop, like that it does an automatic, like ever so many points, it'll move the stop? Is that what you're talking about? Yeah. I don't. Because markets, I mean, I haven't found that markets tend to move. You know, although there's some great stuff on harmonic rotations and things like that that you can get into, but I just manually put my trail the stops with them, because I typically price levels that I would be looking at. Like, let's say, for example, let's go back here and let's turn this. Let's say, for example, that let's see if we get a higher high, we could see we could potentially, we got 6 minutes. Let's say, for example, that in 6 minutes we get into the next period, we get into a G period, and we trade above 67.08. Okay, so that would potentially negate the trend lower. You know, then I could have a stop to say I don't want any new lows, and then for each subsequent 30-minute period, wherever that low is, I could kind of just trail that. Because if we start going into rotations later in the session, what's going to end up happening? We'll go back and look at a prior session to just help with this. Is you can see in subsequent periods, the trade just gets tighter and tighter as it goes towards the close. I don't know how wide those are going to be. There's averages around all that kind of stuff, but I typically just kind of can set them based on that period and go from there. So I don't use trailing stops. My historical experience with trailing stops is I put the stop in, and it was too tight, rather than just saying where was a price level where price was defended. That was a better place for me to do a stop. Can they get above 6,700? But good question. Unless they get some more sellers in here, I think this thing is about done to the downside. Just personally, I kind of think that's the case. Let's see if they can get above 67. You know, so kind of what I'll be looking for the rest of the day. And on Fridays, I don't trade much into the afternoon, but like say this wasn't a Friday, I think there is the potential for a rotation higher, and I could either try to go long with that, you know, or wait for it to come for me for a potential short. I could do either one. You know, I could, if I believe the auction's going higher up into an area that I want to sell it, there's no reason I can't participate going higher into the area that I want to sell. Or I can wait for it to get to those areas because I want the auction to come to me, which is always a good thing. Or I could see if they, you know, trade into these further areas. I like areas of entry away from a point of control, because that means that there's somebody, you know, that could be potentially getting trapped away from value, and you can get some, you know, pretty aggressive snapback stuff. So we'll see how that goes. Real quick, I just kind of want to look at the long-term picture here. Let's look at the ES, since that is the most popular product. So let's just kind of go back here, and we're just looking historically. So here was what I call the you know, the base of the move. This was actually election day, 2016. So we've been kind of in an upward trajectory since then. So I'm going to draw my composite from that level. It's going to let me. Ooh. There we go. So from the peak. And this gives us a pretty interesting picture. So we're trading 26.53 right now. So we're trading right here, and this only shows end of day data. So we're below this node here at 26.71. Kind of the next, you know, area to watch. It's kind of, you know, you can see where we dipped below. I think if we dip below this again, then we're, you know, heading to this area, 2400 handle. Definitely in a bracket of price, you know. So if we can hold this, I think we could rotate back up till the end of this end of the year. But for the auction to go higher, it would have to get above 2830, which right now this looks like it's struggling to do so. So that's would not be surprised especially if we get more bad news, to see us punch through. Now there is a low volume node here. So typically low volume nodes on the first pass, you know, they punch out. You can see we've actually tested into that area, you know, before, but because we tested it before and found buyers, the second time typically is the place where you push through. So I think we got a date with this zone, which there's some good volume. It should hold the auction up. At least be a fight. That's just some broader contextual stuff to kind of give us a perspective of what we're looking at. You know, and then if you go all the way back to 08, so let's see. To the high. Then you can really see where the big levels are. You know, 2108 is, that could be a lifetime buy zone right in there. But the 2400 area, so, you know, this area in here and this area are ones to keep on the radar. Okay. That's it. Next week, our team's going to be looking at some distinct setups. You know, so people who go through our pathway, you know, kind of how we start is we set them up with 2 different trade setups to look for every day, and you know, then we build the playbook around that. So next week we're going to look at up to 7 different setups that you can add to your playbook. So if you're looking for specific setups, it's a great week to join with us. Total trial, give you an opportunity to, be on our seminar on Monday and then trade with us Tuesday and Thursday, interact with us along, every day as we're looking at these setups. Other ways you can get help is our free course, You Already Know How to Trade. Our intro video course, which this is really, my assumption is that most of you on this call have been around markets for a while. So that's kind of my assumption is you've been around for a while. If all of this is Greek, you have no idea what you're doing, and you're just like, I just want to know how to trade. I don't know where even to start. Build a Profile is a great way to do that. But like most people you've been around markets for a while, you understand the nomenclature, you're just looking for some consistency, then spend a week with us. See if it's a fit. The risk is your time. That's the risk. But I haven't had somebody come back and say, hey, it wasn't worth my time. So I think it's a pretty good deal. If you're on the Twitters, you can connect with us at Trade with Profile, and also on Facebook, Trade with Profile. And again, if you ever have any questions, you can send us a note at team@tradewithprofile or give us a call. Happy to talk with you and see if we're helpful in the next step of your development. And that's really what we're all about, is to help you take steps in your development that's going to lead toward success, your success. Right? Those are the stories that I want to see more and more of, are traders finding consistency in the markets. And that's why JP and others in our team are there, and we're building a community in that way. So really appreciate you spending some time with us today. We'll be back next Friday and see what we can get in, what kind of stuff we can get into. Try to get the recording out either today or tomorrow, so for your review, and we'll send that out via email. If you have any questions that, based on what you saw or review, and just reply back, and we'll try to get back to you as we can. But really appreciate the time and the questions, and I hope it's helped move you forward just a little bit. All right, that's it. Have a fantastic weekend. Get some rest. I'm sure we're going to have some fantastic geopolitical news to deal with on Monday, and we'll see how it goes next week. Peace, everybody.